What's up guys, welcome to my channel. My name is Ilya and today I want to talk about top 5 things I wish I knew before I start trading options. Saved me so much money. Probably by now I would have been a millionaire. Oh, I'm just joking, probably not, but I definitely would have lost less than I did. So here's the video. I'm not trying to make it very long. You have to learn on my mistakes. But before we start, hit that like button, follow me and help me grow because it's so important and then it's so hard too. And number one thing is Greeks. Not these ancient Greeks, I'm talking about these Greeks. They're so important and then help you out so much. You can't even imagine. Before I was scrolling and I look at the Greeks and I'm like, what are they? They're probably not that important. But they show you how much your contract will grow if the stock price will go up $1. How much your option lose every single day when you go to expiration, closer and closer. So they're so important and they're not that hard, so it doesn't take a lot of time to learn them. So just spend 5-10 minutes, just read into it and just understand the basics of Greeks. More about Greeks I will talk in another dedicated video because I think that this theme is very important and it will help you a lot, and in the future maybe it will help you to make even more money. And guess what? Trading options and trading in general, it's all about money. So we want to make more money with less risk. The second thing, you do not need to execute your option to profit, make money. You can sell the contract. So you have two options pretty much how to execute your options. Two options to execute your options. Oh well. So the first option, you can wait to the execution date, so the expiration date, or even before, and you can click on the execute. So what is the execution of the option? So as we know that one option contract is a right, but not an obligation. So if you bought one option of Apple, it means that you can buy 100 shares of Apple and the price will be that strike price. So technically, if let's say you bought a call option, right, and the strike price is 250 and Apple right now is 300, so you will buy 100 shares of Apple for 250 and then you can sell it right away for 300. So the profit will be 100 times 50, which is $5,000. But that's not only one way how you can make money. You can sell the contract itself because not everybody buys and sells right away. Sometimes people just buy Apple with a good price and keep them. So you can sell the contract and the difference in profit not gonna be even that big. Sometimes selling contract will make you more money than executing your option. So you don't have to wait all the way to the end, but you need a really good strategy. Let's say if you hit 10%, sell it so you can lock the profit and you make money. Don't make my mistakes. I lost so much money by not locking the profit because I was greedy. Third, always buy contracts 2-3 weeks ahead at least, because it takes some time to stock go up or down, especially right now during Corona. It's crazy. Every day is different news. Today is a good news, tomorrow is a bad news, stimulus checks, more Corona cases, and blah blah blah. So you always want to give yourself a couple weeks for stock go up or down, and you will make more money because of the Greeks too. You have to know how they work, so check them out. If you're buying, of course, if you're buying, let's say today is Wednesday and you're buying contract for this following Friday, contract will be very, very cheap if you're buying very high strike point, but your possibility of profit is very, very, very low too. This is why I'm always buying 2-3 weeks ahead at least, so I am safe, so I know what to do and I have a backup plan how I want to profit if my stock going up or down, or maybe this week it will lose 20% and next week because new good news came out it will go up 50%. Well, of course 50% it won't go up, it's just like jokes, but you always have to buy 2-3 weeks ahead at least. Sometimes I'm buying even a month ahead or 2 months ahead. It all depends on your plan. It all depends why you think the stock price will go up or down. Maybe some good news will come out, maybe earnings and etc. So stick to your plan and buy 2-3 weeks ahead at least. 4. Not all options can be sold easily. Everybody think if you will buy options on a really weird and without a volume stock, you can sell it no matter what. No, in the market there is a thing like volume. So how many people buying and selling this stock? Options has exactly the same thing. So sometimes if you're buying option on a really not that popular stock, it will be very hard to sell these options because nobody needs them. Sometimes it happens. Or maybe it will take a couple of days to fill that option, and guess what? Let's say option price right now went up, so you can sell it for $100 per contract, and you're trying to fulfill it and you can't because nobody wants to buy it. And let's say you're selling 5 contracts today, you can sell only 2 contracts for $100, and tomorrow your contracts will cost only $50, but you still have 3 contracts left. So this is why I'm always trading options only on the stock that I know has a lot of volume, only options that has a lot of volume, so it's easy to sell with the highest profit. This is my way to do options, and I think that I would rather pay a little bit more extra money for good volume than to buy cheaper options, but like it's impossible to sell after. In the end, you want to sell them with profit, so I always buy an option that it's easy to sell. And number 5 thing, you don't have to hit the break-even price to make money. So break-even price is very important when you're very close to the expiration date. If you're buying options, like I told you, 2-3 weeks ahead, break-even price is not very important, and depends on the Greeks. Your price and your option price will go up no matter what. You can be still $10-20 below the break-even price, but you still can profit because contract gains value. But you have to be very careful about it, because let's say if you bought an option with 2-week expiration and this week you're under break-even price, but next week because of Greeks, because it's already very close to the expiration date, that break-even price is very important. And let's say on 2 or 3 days before the expiration date, if you don't hit the break-even price, most likely you're gonna lose money. So break-even, you can make money even if you don't hit break-even price, if you have a good amount of time from now to the expiration date. Alright guys, so that's it for today. It was top 5 things that I wish I knew when I start trading options. I hope you liked this video. I hope it was very helpful to you. Don't make my mistakes, learn on my mistakes. This is how you become smarter, learning on somebody else's mistake. My name is Ilya. Follow me, hit that like button, and I'll make even more videos for you guys. Good luck.